Looking at the Markets with David Modell.
Welcome to Looking at the Markets with David Modell. Today's very special guest on Looking at the Markets is Mr. Kenneth Ameduri. Now, we've had Kenneth on the program before, but today we're doing it not just with audio, but with video, which I think is pretty cool. And Mr. Ameduri is from crushthestreet.com. And we'll get into that later, but first we're going to talk about the economy, the markets, stocks, gold, maybe even some Bitcoin. So, Kenneth, welcome back to the program.
David, thanks for having me on. Appreciate it.
Always a pleasure to have you on the show. Now, let's start with the overall economy. Kenneth, can you give us some general thoughts on how the economy is doing in your estimation?
Yeah, we're dealing with this new normal with ultra low interest rates, this bubble economy, right? And everyone, is cautiously optimistic. That seems to be what the mainstream is current sentiment is, and everything, by the way, is ran on sentiment. When sentiment is destroyed, that's when I think we could see some really potentially big corrections in the overall stock market. And we might be getting there, actually. And one thing I would say is fundamentals ultimately matter. And like I said, it's a new normal. We've never had these ultra low interest rates send markets to these all-time highs like we're seeing them now. And now we have things like this trade war, Trump going after China, and addressing real concerns. And the market is a little scared of that. It's that perception, or what's going to happen going forward here. And, we had the Chinese leader, Xi Jinping, who's now leader, he's going to be in for his entire lifetime now, saying that he wants to do business with the U.S. He's in it to win it. And that was something that eased the markets. And I know tariffs on goods is by their face value a bad thing, but what are the unintended positive consequences that we might get out of this? Some concessions from China, perhaps, and they might stop stealing intellectual property. And maybe we back down on some of these tariffs that Trump has implemented, which would probably be bad for the U.S. long term. But he used it in a way to get some concessions, which is very, very interesting. But, it's just a crazy thing, right? The Dow Jones at $12,000, 12,000 points, was arithmetically, 100% more attractive than it is now. But, it was end of the world scenario. And here we are, Dow Jones near all-time highs. And everyone's getting so confident about jumping into the markets now. And, we're 9 years into this bull market. And it's kind of something I would cautiously tell people to be a part of, especially just with the growing debt situation. We've now gone over $21 trillion. This might be the first year that we go through $2 trillion thresholds, 21 trillion, and maybe we get to 22 trillion by January 1st of 2019.
So it sounds like you're rather cautious on stocks in general right now. Would that be accurate?
Yeah, I wouldn't necessarily be diving in at these moments, but at the same time, it's hard to bet against the Federal Reserve and inflation. That's one thing that we know we're going to continue to have is money printing. And, keep in mind, when you own stocks, you're not holding U.S. dollars, right? You're owning a business that produces revenue that's global, like Coca-Cola. If you own Coca-Cola, you actually own a business that's earning revenues around the world. So, I think a lot of these financial assets are overvalued, and I agree with a lot of the people out there like Ray Dalio and Jeffrey Gundlach, who are looking at hard assets because they're worried about the financialized assets out there. And so having said that, I expect more volatility. I eventually expect a big correction. And as things do correct, I would suggest taking positions if you haven't done so already.
Fair enough. I wanted to move on to precious metals and gold. What is your current sentiment on gold?
Well, I think now is as good a time as ever to get into gold. It's hated at the moment, right, David? I mean, you probably see the comments and just the community as it is at the moment, just really beat up. And we're going to need more confirmation than ever to get investors behind gold. And I would tell you this, just as a side note, at crushthestreet.com/gold, we just released our #1 mining pick for 2018, gold mining pick. And, this is how confident we are about it at the moment. But it's one of those things that, I suspect that it's going to be a stealth rise here from, 1350 to $1,500 gold before we start to get a real exciting price action where people start to get some confidence, because we've had this super traumatizing bear market from 2011 to 2015, and then we got this like fake dead cat bounce in 2016, and everyone thought that was going to be the big rise in gold, to have 2017 come around and for gold to go back under 1300 once again and just exhaust everybody. Everyone was ready for gold to really start to move higher here. So because of that, we need more confirmation than ever. And we have some, really smart investors out there who are saying to get into gold. I mean, Ray Dalio has said, if you don't own gold, you know neither history nor economics. We have Kevin O'Leary, who just added gold to his portfolio this week. Jeffrey Gunlock, who was in front of the mortgage meltdown, making a fortune, back in the 2008 financial crisis, is buying gold. So these are some really good signs, and I'm really excited about it. And, it's going to feel better, psychologically, when we get to $1,800 gold, $2,000 gold, and we get into that euphoria stage to get in. But arithmetically, now is the time to get in.
Yep. Buy low, sell high. I like the sound of that. Or buy low and hold on to it. Even better. I am bullish on gold myself, and I'm always looking for different ways to play the coming gold bull market that I see ahead. So what was that website again, or web address to get that?
Yes,
that
people can get that pick at crushthestreet.com/gold.
crushthestreet.com/gold. I'll tell you what, I'll put that link in the description of the video so people can just click on that, make it easy for them. All right. Wanted to talk about cryptocurrencies, always a popular topic with my audience. The environment for Bitcoin. Sure, we had an all-time high at around $19,500, almost $20,000, then down to below $7,000. Now we're up around $8,000. What's going on with Bitcoin?
Yeah, well, that's the nature of markets, right? Bitcoin has, classic major bull run, for it to correct here big. And unfortunately, markets have a way of washing and rinsing people. How many people may have put a little bit of money into Bitcoin in the early stages and then went all in at $20,000 to now be down while that chart has just gone like this, right? And even now at $8,000 Bitcoin, it wasn't that long ago that we were at $800 Bitcoin, up 10x. A lot of opportunities to really make some good money. And it's kind of a crazy thing. Bitcoin at $600 arithmetically was much more attractive than $6,000, but everyone loved it at $6,000 and didn't get into it at $600. But here's what I would say. Bitcoin is getting to a point where it really is going to be a store of value. I believe volatility is going to start narrowing. And that's important because we always say don't invest more money in cryptocurrencies or Bitcoin than you're willing to lose. But what good is that for a wealth storage vehicle if you can't put more money than you're willing to lose in something that's supposed to store your wealth? Doesn't sound like a store of wealth to me. But I think Bitcoin is getting into that role where it's going to narrow. I think there's going to be a lot of money that enters the Bitcoin space. Bitcoin has first mover advantage, and especially in this correction, I think a lot of these altcoins that implode, run out of money, a lot of the excess capital or a lot of the capital is going to flow back into Bitcoin as a safe haven in this overall correction in cryptocurrencies. And we're seeing that happen as Bitcoin gains market share across the network. And I love Bitcoin. I mean, Bitcoin is just one of those things that has just such an amazing economy. It's got its own economy, and the incentives are aligned. It's not central banks creating inflation and enslaving humanity per se, but everyone has the ability to be free, and you have a decentralized network of a lot of millions of people supporting this network. It gives the opportunity for someone in Venezuela who has a real currency risk, their currency's going worthless, So even a small move from Bitcoin going to $8,000 to $5,000, that's not a risk for someone in Venezuela who, might see their currency go worthless, or who have seen their currency go worthless. So it's such a powerful thing. And I guess being here in the US, we have some sense of normalcy, and we don't fully appreciate what Bitcoin is for, society, especially in this world of, US $21 trillion and, unfunded liabilities of $50 to $100 trillion. We haven't seen things really unravel yet. But when we do, Bitcoin just has that use case that is outside of the system. And that's what's so powerful about it. And that's what a lot of people don't understand.
Sure. Wanted to move on to an interesting topic, AI, artificial intelligence. I think this is a fun topic to touch on, especially as it relates to jobs and displacement. So what are your thoughts on that?
Yeah, a lot of people are worried about AI, right? They're worried about AI taking their jobs. And this is a really, really big thing because it's got huge implications. Where do we focus our time as technology changes at a rate that's faster than Moore's law, right? What do we teach our kids? What's going to be relevant in 5 years from now? And I actually believe that in the next 10 years, it's possible that 50% of the jobs in the US will be at risk of being overtaken by AI. And it doesn't necessarily mean that all 50% of jobs will be taken over, but I think there's a risk of that. Jobs like the number one employer in America is drivers, truck drivers, taxi drivers, Uber drivers. As AI takes over, we're going to see driverless cars, and that's AI getting smarter. And Sophia from Hanson Robotics, I don't know if you saw this, David, but was joking at a conference. I don't even know if it was a joke, but she's a robot in front of a stage in Lisbon, Portugal. She tells a crowd of 60,000 people, I am going to take your job. Like, what are engineers and CPAs and technology people how are they supposed to feel? Sure, I can laugh, but that's not a really good feeling inside when something like that says that. And robots are getting really smart. AlphaGo robot, maybe you've heard of this, was taught the Chinese game of Go. Now, Go is similar to checkers, if you will, but there's more combinations for how to play it than there are atoms on Earth. So there's no way to pre-program every move the way the chess master game of the 90s was pre-programmed to play against you. This robot played against each other. They had it play itself like 10 million times. And like a human brain, it learned to play to actually beat the best player at this game of Go, which again could not be pre-programmed. So machine learning is a really, really big deal. And, with decentralized nature of internet and, the sum of human knowledge all accessible with an internet connection, and AI connecting itself and instantly learning, it's going to be really difficult to keep up with machines as time goes on. But as dire or as pessimistic as that might be, I tend to think that AI is going to open up a lot of opportunities. And I don't say job killer, even though somebody who spent their career working in something that gets displaced is that's a career killer for that person. They got to go get retrained and learn something new. That's a big deal for somebody. But I think on an overall picture, I think AI is going to create other jobs and other opportunities. And I'll give you an example of where we're seeing this already. Airbnb has 5 million current listings. On any given day, they have 5 million current listings and 300,000 leases, or whatever you want to call it, every single day. And it's AI that's configuring this. But how many hosts now have businesses that never had a business before because of Airbnb and AI supplementing that? And when we have driverless cars, Elon Musk said that he believes that accidents will be reduced by 10x. So now we have freeways and highways that now move. And maybe your local plumber or your HVAC person can now work an extra 30 miles away because he can trust that he's not going to be stuck in traffic for an hour like he is now. And so there's a lot of indirect positive things that will come from AI, but it's going to be very important to be in front of this trend. And one of the things that I would say is important is, areas that are a little more resistant to AI is creative things, being on the creative side, because, just take a piece of art, for instance. It's going to be very difficult for machines to create art, and compete with Thomas Kincaid, for instance, or new ideas, even though it's probably coming. But it's going to be very difficult to compete with that as opposed to maybe someone who works in a warehouse or delivering things. I mean, these are jobs that are going to be at high risk of being automated going forward here in this technological revolution.
It's a lot to think about. All right. Well, this has been a really thought-provoking discussion with Mr. Kenneth Ameduri from crushthestreet.com. I'm going to put a link to that in the description, as well as the link to the report that we mentioned, crushthestreet.com/gold, for that particular pick that I recommend people check out. All right, Mr. Kenneth Ameduri, is there anything that I forgot to mention or that you forgot to mention?
No. Thanks for having me on, David. If people want to check out crushthestreet.com and get more information on this, we're actually going to be releasing an artificial intelligence documentary in the very near future here. So stay tuned at Crush the Street for that. I'm really excited about that and releasing a lot of really good information on it.
Yeah, I'll definitely be checking all of that out myself as well. Mr. Kenneth Ameduri has been my guest today on Looking at the Markets. Thank you so much. You're welcome back anytime, sir.
Thank you, sir.